Gold prices are taking a hit this week, down some 6%. And here to talk about what they're seeing right now and maybe what we're looking for ahead to is Dave Hightower. Dave, thanks so much for being with us.
Good to be here.
So Dave, when you look at this drop that we've seen this week, what are you really attributing it to?
Well, I think it's a combination of events. Logically, there is some fear we will begin to taper. And that issue, though, should drift to the back burner pretty quick as the tapering will be here, whether it's September 18th, October 18th, or November 18th. It's going to be here. It's probably not going to be as bad of an event as what many markets are making out to be. But I also think behind the scenes, there was a little bit of a pent-up expectation of a supply shortage developing because of severe South African wage strikes. And that was unwound earlier this week, and it hasn't been given that much credit. But you meld those two items together, and you have a bearish near-term outlook for gold.
Yeah, it's interesting you touch on the South African mine disputes. A lot of people have been seemingly have been downplaying how big that is. I mean, can you go a little further into it, why you think it's a bigger deal than maybe most other people are saying?
Well, I mean, it's big because we have seen a multi-year pattern of declining South African gold production. Granted, we've seen production pick up elsewhere in the world, but discussions earlier this month about how a double-digit wage increase would actually put the mining companies in a position to remove capital expenditures, meaning new mine developments and other infrastructure problems. So just because we solved the near-term labor issue, we haven't solved the big picture, which is why do supplies of gold continue to decline.
Sure. So speaking of tapering, you mentioned earlier, we do have a report out this morning from the Nikkei newspaper in Japan, citing sources that say President Obama is set to nominate Larry Summers as the next Fed chairman. What would this mean for gold participants?
Well, I have two thoughts on that. First of all, the Nikkei hasn't exactly had the inside track on political developments in the U.S., and it has been somewhat discounted. But I think Larry Summers is the inside, he's the favorite for the slot, and he's not a fan of quantitative easing. He is less politically independent than probably any of the last three Fed chairmen that we've had. And so I don't know. I think it could be seen as somewhat of a negative for gold prices.
And ultimately, you think it's just because people perceive him as what, a bit more hawkish than, say, a Janet Yellen or someone else?
Yeah, I mean, he's openly suggested that the easy money policies led to the financial abuses, and so this will be his chance to maybe punish big banks again, because that's the political side of the scale that he's on.
All right, Dave, we really appreciate your take on these things and hope to have you back.
I hope to be back. Thank you.
All right. And for The Street, I'm Joe Deaux.